I'm Mortgage Mark. Let's talk about interest rates and what makes them move. So, what a loaded question, and I'm going to answer this as succinctly as I can. The answer is a ton, right? What makes the stock market move? That's what I'm going to come back to you and say, what makes the stock market move? I don't know, a whole bunch of information, right? So, in our world, think of it almost inversely related to the stock market. That's not always the case, but they do correlate in that sense. When the equities market, when stocks are doing really well, the economy's humming along, things are good, you're going to find that a lot of the money, so let's imagine the billions of dollars, trillions of dollars that are out there from hedge fund managers to just everyday investors, they're going to put their money to where they can get a high rate of return. And a lot of times that's in stocks. And all of a sudden, when the economy starts going south or there's a little uncertainty in the world, you'll see money will come out of stocks and go into certain safe things like bonds, treasuries, and mortgage-backed securities. So a mortgage is something super safe. Not a high return, but it's somewhere you can put your money for 30 years as a big time institution and get money back, right? So that's what drives our market. When people want a flight to safety, they go to bonds, treasuries, mortgage-backed securities. That's what will drive our rates lower. Think of supply and demand. So in that instance, there's a lot of demand for something safe, and so money comes into our world and the rates go down. Now in today's current environment, with inflation at like super sky high, the highest has been in 40 plus years, you're gonna find that makes our rates go higher. Why? Because if I'm some big hedge fund, money manager, 401k manager, whatever, right? So if I'm some big company or institution and I want to put my money somewhere for 30 years, if the rate's at 5.x for my 30-year fixed rate, but inflation's 8.6, I'm losing money over time. Now the hope and dream is that inflation won't be forever, but at this moment, I'm gonna need a higher return to park my money there. So that's what makes rates go up, because people won't go buy those mortgages. So to entice them, the rates need to go up before there's actual, folks willing to come in and put the money in to buy those rates. So that's a very complicated answer, but the point is, it takes a lot. There's a lot of different things that can move rates. It's not just one thing. It's not, I've had people say like, oh man, it's Friday. Fridays are the best day to lock, or the end of the month. It does, again, it's the market, guys. It does change daily. It can change hourly. So if you guys find a rate you like, lock. I can't predict the future any more than anybody else can. We can certainly give our 2 cents, but hopefully that at least gives you some insight into what moves interest rates. We'd love to answer more questions as it pertains to you. You can find us at mortgagemark.com. And as always, when you think mortgage, think Mark.